Hi everyone. Good afternoon. We'll just wait another minute for a couple of folks more to join, and then we'll start. हाँ सचिन जी, इस वेबिनार में हम बोथ इंग्लिश और हिंदी का यूज करेंगे सो दैट सबको समझ में आए. सो इट्स विल बी अ मिक्स ऑफ हिंदी एंड इंग्लिश. चलिए. Okay, we shall start. First of all, welcome everyone for joining this webinar for term insurance. For term insurance is the foundation of your wealth journey, and it's very, very important that you understand about the product, about the concept of this product, and how can we use this product to make ourselves protected and protect our financial wealth journey. And thank you so much for taking out 40-45 minutes on a Sunday afternoon. Let me start by sharing what happens if your income stops today. Just a quick round of poll for the people on the call. What happens if your income stops today? Is it A? Does your investment stop? Is it B? Does your financial goals get delayed? Is it C? Your lifestyle has to shrink? Or it's D? All of the above. I'll take a minute. People on the chat can respond, and we will kind of look at what the responses are. Awesome. So a lot of you folks have said D as the answer, and that is right. So what happens, right? So today, if you are out of a job, if your income stops, day one, the first thing happens is you kind of stop investing. Second, day two, you start dipping into the savings after a month or so, and after 6 months or so, if you don't get another job, your lifestyle also starts shrinking. You can't take vacations, you can't buy expensive gadgets, and so on and so forth. Now think about it. If you lose your job today, there is still a chance that 6 months later you will get another job. But what if something happens to you? अगर कुछ हो गया, so you will तो फिर कुछ chance ही नहीं है ना दोबारा job मिलने का. So if that happens, how do we kind of maintain the lifestyle? How do we make sure that the financial journey, financial wealth creation does not stop? Another question, right? If your income stops today, how long do you think your family can maintain the same lifestyle? How many months can your family live in the same house? How many months can your children go to the same school? How many months can your children and your family can enjoy the same vacation? What happens? Again, a quick round. Someone mentioned less than 3 months. What about others? 6 months? 3 months? A lot of A's. And I think a lot of A's and some B's. Definitely nobody has 3 years. Very few have 1 year. But that is the truth, right? I have a lot of friends who work in MNCs. They make good 25-30 lakh rupees per year kind of an income. but a large part of them will realize they have liquidity of less than 3 months. Why? Because if you are making 2 lakh rupees per month, you have expenses, you have children education, you have EMIs, and at the end of the day, if you have savings, it's largely into either bought into our house or in FDs, and then you start have to break all these FDs and investments to get to your lifestyle. Then hence it's very very tough, right? If you are a person who kind of has income as your primary source of managing your lifestyle, that's very very difficult to not to be able to sustain the same lifestyle without that income, right? Because your income has kind of created that lifestyle for you. And that's why, and this is what happens, right? Once your income goes away, your lifestyle, your home loan, your children education, your parents medical bill, everything becomes very very tough. 95% of the families will not be able to survive with the same kind of lifestyle for more than 1 year without the income replacement. And that is where term insurance comes in, right? If the discomfort you feel when you think about that, if I don't have salary for 3 months, if I don't have income for 3 months, if I don't have my business income for 3 months, that is the challenge which term insurance solves for you today. Now, another set of questions for everyone. We'll start with a lot of questions. We want to keep it very interactive. What is the single biggest asset in your financial plan? अगर मैं आपसे पूछूं कि आपका सिंगल बिगेस्ट एसेट क्या है in on this call, people who are on this call, what would be your answer? A lot of people said your future earning potential. I think very very smart set of folks on the call, and I think that is the right answer, your future earning potential. So think about, if you are making, let's say, 20 lakh rupees per year, and if you're 30-year-old, let's say you work till the next 30 years, you will make 20 lakh into 30, which is almost 6 crore, assuming inflation is adjusted with your increase in salary. But even if you do grow very inflation adjusted, growth is constant, at 20 lakh for 30 years, you will end up making 6 crore. Now, most of the people will not have 6 crores in their saving accounts, will not have a portfolio of 6 crores, will also not have a house of 6 crores. And a typical Indian family does not have all of this. And hence, future earning potential is very, very important. Even if you are making 10 lakh, that is still is 3 crores. Now, this is a very nice amount of money which you have. But now, where is the problem? The problem is when you are starting today at the age of 25, you will not have a lot of savings, but you will have a lot of liabilities, because you have you start having, your parents get aged, they retire or they stop working, you have to figure out their medical bills, you get married, you have to buy a house, you have taken a 1 crore house where you have 70-80 lakhs of home loan or even higher, you have your children which you have to pay for their school fees, you have to save for their education, you have to save for their marriages, right? So a lot of liability happens when you are younger, but a lot of wealth creation happens when you are older. So when you have started your financial journey, what is the first thing you should do? You should protect yourself from this high risk zone. So this is the place where the people are most vulnerable. It is at the age of 30, it is at the age of 35, where you just gotten married, taken a home loan, etc. And term insurance kind of help you protect this zone. And how does it protect yourself from this zone? It protects yourself from this zone by providing you a cover, which very high life cover at a very very low cost. So for example, at the age of 60, let's assume on NPV today, you want to have 3 crore rupees in your asset, and if you take care of your expenses, all the sum of all your liabilities is adding up to 3 crores. You can buy a term insurance here worth 3 crores, and no matter what happens, whether you have your income, whether you are around or you are not around, term insurance will protect your family from this risk. Next question. What do most Indians start with, or what did you start with when you started your financial journey, if you have already started, and if you have not started, what will you start with as a financial journey? People on the call, what do you start your financial journey with? Protection. I I think super smart crowd. Real estate, FDs, FDs. See, when I started stocks, clearly some very maverick people also on the call. One of my friends started with FNO, futures and options. But yeah, there are people. I personally started with FD in my first 2 years of my career. Then I went to buy a real estate. That was my second biggest investment. I realized it was not as smart. And I think that is the problem. In the last few years, people have figured out that stocks make a lot of money, real estate makes a lot of money, FD is safe, and obviously money is guaranteed. So people invest in some of these products. What they don't do is start with a protection. Most of the Indians actually start with FDs, and that is the truth. So FDs include your FD, your post office, or anything else. But most of the people in India start with FDs, and that is the truth. Now, is that a bad answer? No, it is not a bad answer. But most of the Indians should start with, as you rightly said, protection. And why are we saying protection? There's a very, very good chart which kind of talks about why people should start with different products. At the base of it is protection, which is basically buying a term insurance, health insurance, and if you have taken a loan, another form of a life insurance for your loan, etc. Or if you have taken a very high value asset, you take a asset insurance also. So at the base of it is protection or insurance. Here, term insurance is super important because it's the first thing which protects you. You are the most important part asset, as we have discussed, and the term insurance protects that asset. Once you have taken protection, then it starts, right? Then you start with some of the stable products which are more guaranteed, like your FDs, PPFs, annuities, employee provident fund, etc. If you have more disposable income, then you go to moderate risk. You buy equities, corporate bonds, mutual funds, etc. And if you are a high risk taker, younger, you have taken your protection and other stuff, you go into high risk. You buy crypto, you buy FNO, which is your futures and options, and then you also buy penny stocks. Now, I have a friend who bought FNO, who started investing in futures and options without even buying anything below. And the only thing I told him is that it's like doing a skydiving without a parachute. The thrill is there, the value is there, but if something happens, it's going to become very, very bad. So what we always recommend is that depending on your disposable income, depending on where we are in the journey, while you can choose between high, moderate, and low risk, you should first buy protection, and then you can split your savings or your investment portfolios across these three portfolios depending on your disposable income. If your disposable income is low, you should focus more on low to moderate risk. If you're younger, you should focus on moderate risk, and if you're older, you should focus on low risk. And then if you have more disposable income and if you want to take some bets and you have money which you can probably lose and it will not cause a significant dent to your lifestyle, then you can always go for aggressive product like FNO and cryptos. So this is what is very important, and this is where term as a foundation kind of helps. What is term insurance? What is wealth? First of all, what is wealth? Wealth is consistent income into time. You have a consistent income, which is either your paycheck, your rentals, anything, and that consistent income over time becomes your wealth. Now, term insurance protects the consistency variable in your wealth equation. So even if you are not there is some consistent income or consistent amount which will come on your behalf because you have bought a term insurance, which will take care of your house, which will take care of your child education, which will take care of your expenses, which will take care of your marriage of your children. So all of these products, all of these expenses or liabilities will get covered if you have a term insurance. And what is the good thing about term insurance? Okay, you buy a term insurance today, you take it for 30 years. If you survive 30 years, awesome, congratulations, you have created your wealth by living well. And if something happens between these 30 years, whether it's in year 1 or year 30, your family is secured because your wealth has been created through a term insurance. So term insurance is that asset which you use when you are not able to create other assets. So that's very, very important to understand. I will also talk about what are a little bit into technical parts in terms of, you have always, if you are part of this journey, you would have understood there is a term plan, pure term plan, where people will say there's nothing which you get at the end of the term plan and it feels like an expense. Kuch milta nahi hai sir isme wapas. And then you have return or premium plans, where basically people believe ki yaar, I will take term insurance, but I want an ROP plan, which means jitna bhi I have invested, all of that money kind of comes back to me. Now I will tell you what is the problem. See, the problem is that the life insurance, the return of premium plans are expensive. So if you are a 35-year-old looking for a 1 crore term insurance, you will end up paying somewhere between 700 to 800 rupees per month for the policy. If you are taking an ROP plan for the same policy, you will pay 2.2x or 2.5x of the premium. So the question is, the question is not whether to buy pure term or a return of premium plan. The question is, what can you do with the money you have saved? So if you have saved 800 rupees per month, what will you do with it? And I will take an example. Let's open a SIP calculator and I will show you how it works. Let's say if you have 1,000 rupees extra, you want to invest it for 35 years and you get a CAGR of, let's say, 12%, then you are able to generate 55 lakhs any which ways. अभी आपने 12% पे नहीं करना है, आप let's say 7% पे FD पे करना चाहते हैं, then also you end up making 17 lakh rupees. Now instead of paying 1,500 rupees, which is almost 18,000 a year, and over 20 years, over 40 years, let's say if you pay, which is around 7.2 lakhs. So instead of paying 7.2 lakhs, you can pay half of this, which is almost 3.6 lakhs, and you can invest the remaining amount in a SIP. And if it's an RD also, which gives you 7% return, you will still end up making 25 lakh rupees. So either you get 7 lakh rupees as ROP, or you take a pure term plan and then you put the rest of the money into a simple SIP and you make 25 lakh rupees at the end of 40 years. So that is the value of term plan. And in case term plan get used, and unfortunately or so, then any which ways, whether you pay 700 rupees or you pay 1,500 rupees, you get the same 1 crore sum assured, which is guaranteed. So that's the difference between a pure term plan and ROP plan. We recommend people to buy pure term because it's cheaper, and if they are able to invest the rest of the money in a disciplined way, and if they're not able to spend money in a disciplined way, then they can go for an ROP plan, because at least it will create some discipline and it will put some money into the savings perspective. So that's the difference between a pure term and a return of premium plans. Also remember that in a pure term plan, nowadays almost all insurers give an option to exit the policy before the policy ends. So for example, if you have taken a cover till 70 years, you can exit at the age of 65 and take all your premium back. So it becomes an ROP, but instead of getting it on expiry, you can get it 4-5 years before. And what is the value of this? Because in case, let's say you said, I don't know, I am 30-year-old, I don't know how long I will have in the wealth creation journey. But let's say I completed my wealth creation journey in 30 years, but I have taken a term plan of 40 years. Then at the age of after 30 years, you say, okay, I don't need any more protection. Why don't you give me the money back of whatever premium I have paid? And most term insurance companies will surrender the policy and will give back the premium. Now that is very, very valuable in case people want some money and they have completed their financial journey. Though I definitely believe that having a financial protection in a pure term way for the longest period is the most important point. And instead of paying 1,500 rupees, and if you have 1,500 rupees to pay, instead of 1 crore, buy a 2.5 crore term plan, because genuinely whatever you think is required from a term plan perspective, the number is higher. The actual number is definitely higher. And that is across more than lakhs of customers which we service every month. Very few people come onto the platform who are able to actually decide what term plan they buy. Most people will come and say, I want to buy a 1 crore or a 2 crore. So that's the number they would have heard in a marketing or from someone of their friends. But actual term insurance cover required is far higher. What are the 4 pillars of term insurance? So one of the biggest pillar of term insurance is affordable premium. This is something which is surrender possible after 1 year. No, Nitin, the surrender is not possible after 1 year or so. Surrender in the term policy will happen only towards the later half, which is after 25 or 30 years. And in term insurance, if you do not pay your premium after 1 year or 2 years, the policy actually get lapsed, and then you have to kind of get it reactivated from the insurer end. So, okay, so what are the 4 pillars of term insurance? So first of all is affordable premium. Why is it super important? In a very interesting concept, somehow the term insurance prices in India are one of the cheapest in the whole world. We have benchmarked it with a lot of countries, even developers like US, Singapore and others. And we realized that in India, you are actually able to get a far cost-effective term insurance. Now, think about this. If you're what is the probability of a 75-year-old living in India versus living in a developed world like US or Singapore or something, right? It's very different. But India definitely offers one of the world's best term insurance. One, because it's highly competitive. You have 15-17 insurers to choose from, and right, you have a lot more features as well in the term insurance policies. So I absolutely believe these are the best premiums across the country, and right now is a great time to buy because of all the GST savings, etc., which everyone is getting. Locking in the prices, etc., helps. We have also heard that a lot of insurers will probably increase prices in the next couple of months. Some of them will do probably in a month or so. So it's very important to buy term insurance as early as possible, and the premiums are the best. The second is flexible policy term. So most across the world, if you look at term insurance, most insurance will offer either a whole life term insurance, which is till you die, or will offer a term insurance for 20-25 years or till the age of 60. They will not offer a term insurance in between. But in India, you can actually buy a term insurance for 40 years, and you can buy a term insurance till the age of 85. Now, this is very important, because if you are able to buy a term insurance till 85, and then if you kind of survive 85, that's like very good, right? There's nothing better to survive 85 and see your grandkids growing up and kind of living a life with them. But in India, the life expectancy is still 70 to 73. So you are beating the odd by a very high margin. So in that case, that kind of like a guaranteed check for your family. So it is only in India you get the larger term policies. So it's very important. The third is, why is term insurance important? And sorry, there's some cut because of my video. But in guaranteed sum assured, what it means is that in term insurance, it's the only insurance product where there is no bill, because fundamentally you are covering yourself, and you are priceless. Your life is priceless. So what happens in India, after there's a section 45 in Insurance Act, which makes your policy pretty much incontestable after 3 years, making the cover amount guaranteed. So while it is covered from day one, and if you're filling the policy form, I have personally seen cases where you have paid the claim in 1 month of policy getting issued. You can after 3 years, there's an insurance law where even the companies are not even investigating, or we are not even disputing the claims, because that's the government law. It is governed by the regulatory body called IRDAI, which kind of provides a peace of mind to the family. The last one is tax-free payout. So all the insurance premiums payout, which is especially in term insurance, which is given to your nominee, for example, 1 crore or 2 crore or 5 crore, whatever term insurance you take, it is actually tax-free under Section 1010D of the Income Tax Act. So pretty much it's a lump sum amount which is almost tax-free. Now think about it. Now, term insurance is not sold this way, and it is not right to think of this way. But if you take a term insurance in India for 1 crore or 2 crore rupees, and if you take it till the age of 85, it's pretty much a tax-free amount which is guaranteed for your successors, right? In case something happens to you. And if you live till the age of 85, I'm sure you will leave more than 1 or 2 crores to your family any which ways. So that's the power of a product like term insurance. It can be used both to protect early wealth, and it can also be used to create legacy for your family. Now, I always recommend that if you have more disposable money, and instead of looking at longer tenure, look at longer higher sum assured. But I still leave it to the people to decide what they think is the right answer, because fundamentally they have to decide based on their conditions. Now, what are the things we have to understand in the term insurance? So there are three things which you have to understand. What is the right sum assured or right cover amount? What is the tenure which you should buy? And which is the plan? And how do you decide or select the plan? So a quick question to you. If the people on the call have calculated their structured financial planning, have calculated their cover using some structured financial planning, what would that cover amount look like? What is that cover amount to you look like? Is it 50 lakh? Is it 1 crore? Is it 50 crores? What does that number look like? What do you think is the right cover amount, folks on the call? Minimum 1 crore, 2 crore. It's okay if you have not calculated, just think of a number. What do you think is the right cover? Today, if you have to buy term insurance, what cover would you buy? 1 crore, 2 crores, not calculated yet. 2 crores. Awesome. Now, here's an interesting story. Let's say if you are how do you decide your term cover? So there is a rule of thumb, and then there is more detailed calculation. If you don't know the answer, take your annual income, multiply it by 15 to 20, depending on your age. If you are at the age of 25, you multiply it by 20. If you are at the age of 40, you multiply it by 10. So that's how you should define your cover. So if you are making 20 lakhs, and if you are 30-year-old, you should multiply it by 15 and then take 3 crores as a cover. So that's the basic maths. If you want to do it more, what do you say? If you want to do it more mathematically, there are three things to do. First, you calculate your family expenses. Let's say your family expenses is 80,000 per month, which includes, let's say, your rent or EMI. It includes your children education, which includes your current school fees and grocery expenses, etc. Let's say if that expense is around 80,000 per month over 15 years, this will translate to roughly around 1.5 CR. Then you need some money for sending your kid to higher education. If you have two kids, let's say 25 lakhs into 2, 50 lakhs. You need to create some fund for your children's marriage. Again, 25 lakhs at least will be required. I think now marriages are becoming more expensive, but let's assume at least some bare minimum is required. You need some 20-30 lakh rupees for your parents' medical fund as well. And then you need some 10-20 lakhs of emergency fund for your family. That amount will also come to around 3 crore. So broadly, what you have to keep in mind is that if you are able to calculate this in this way, it's very important, it's very good. But if you're not, at least take a 15-20 times of your annual income. That's also very, very good in terms of defining the term insurance. Second question. How long should your term insurance cover you? Till what age should you buy a term insurance? Should you buy it till the age of 60, 65, 70, 75, till financial independence? Or one of my preferred answer, 85, which is like a legacy creation for your family. A lot of people want till financial independence. I think it's a giveaway because it's the only one with a lot of jargon. 100, somebody wants 100. 100 is an awesome answer. till financial independence. Awesome. So the right answer is still financial independence, but how do you determine it? So there are 4 ways to determine it. A lot of people want it till 9900 also. So the people who I'll come back in terms of what should people who want till 9900 to come back with. But there are 4 factors to determine what is the right age. So the first one is retirement age. Till what time are you planning to work and is your income going to continue? If you are a salaried person, you are typically end up working till the age of 60, 62. If you are a business owner, you typically end up working till 65, 70. So that is one way to look at it. Second is loan. If you have a home loan, you are a 40-year-old and you just took a home loan for 20, 30 years, then you know that the right answer is till 70. If you have a kid who is 3-year-old and you are 35 years, you want to buy a term plan for another 25 years because you want to have because your kids are dependent till the age of 25 to 28 on you, at least in India. See, unlike the rest of the developed world where basically kids kind of become very independent at the age of maybe 14 or 18, in India we definitely take care of our kids till 25. My parents took care of me till that age. They paid a lot of my education fund, etc. And I'm assuming I will also do this for my children as well. And the last one is for people who are recommending 99, avoid excess, because fundamentally the longer term you take, the more premium you will end up paying. And I always recommend buying a higher sum assured versus buying a longer tenure. It's a very golden rule of thumb that buy the best sum assured first, and then if you have left with some money, then think about increasing the years. And I will tell you why. Because if you let's say something happens to you after buying term insurance, let's say in 3 years or in 5 years, you will get the same amount of money whether you take a 30-year cover or you take a 40-year cover. And hence you should buy till your liability lasts. So the tip for this is align your term cover period with the longest financial obligation you have in your kitty. So let's say if you have a kitty of 10 years, if you feel that my home loan is the longest, which is going to last for 30 years, or I still don't have a child, I will have a child after 3 years, and then I want to make sure that I want to support my child till the age of 25, 26, then that means you need to buy for 30 years. And a lot of people also want to buy till 75. For people going for 75, might as well go for 85 and create a legacy. Because in the age of 75 also, if you survive till the age of 75, that's also a good one. And remember, we have a feature in almost all term insurance where if you have taken a term plan till the age of 75, 80, and you decide at the age of 65 that you don't need the term cover anymore, you can actually take all your premium back. So that's also available for almost all term insurance. So there is no loss in case either which way is what you select. Now, third one is, how do you select the right plan? So the first thing you selecting the plan is looking at the insurer. The first is looking at what is their claim settlement ratio. Now, when I say claim settlement ratio, now we have a lot of it which says 99.7, 99.6, 99.5. Don't fret over it. As long as it's over 99% or it's closer to 99%, it's actually very, very good. Fundamentally, in the industry, one thing you have to understand, if you have declared everything and if you have filled the form genuinely and paid all your premium over time, there's no way your claim is going to get rejected. Your claim will get settled. So don't worry about it. But look at the insurer who typically have over 99% kind of a claim settlement ratio so that you know the process will be easier and faster. Also look at the amount of money settled. If somebody has settled only 10 claims or 10 crores of claim versus somebody who has settled 1,000 crores or 2,000 crore worth of claim is very, very important. Here are two things you can check. You can check the actual amount of money paid, and you can also check the solvency ratios to understand that the insurer has right amount of money to actually pay for a claim. So any solvency ratio above 1.6, 1.7 or closer to 2 or more is actually very, very good. Which means that the insurer has enough money. IRDA regulates that you should at least have 1.5x or 150% of the claim settlement ratio. Is premium back near 65 applicable for pure term plan also? Yes, Nitin. So premium, if you have taken a term plan till 70, you can take your premium back at the age of 65 also. So that's how it works. The third one is underwriting transparency. What it means is that uh, there are a lot of insurers where you can look at the claim complete ratio, etc. You can look at the documentation proposal, that there is clear answer to that process. So if the process is easy and available to you, that's the right answer. Now most of the insurers now have digital presence also, so you can buy a term insurance digitally as well, and hence there is no issue, because fundamentally the digital partner will take care of all the underwriting process. Now, what are the features which you should buy? Before taking up features, there's another question from Avi, which is, after how many years of holding a term insurance policy can the insurer not reject on medical grounds? So, Avi, the question is, if you have declared it right at the time of purchasing a policy, and if the policy gets issued, insurer will not reject it on day one. So, if, for example, you say that you have a diabetes, now when you tell the insurer you have a diabetes, insurer will get a medical test done. He will check what is your diabetes. Let's say if your HB1AC is 7, you are like you are diabetic. The insurer will say, okay, instead of 1,000 rupees premium per month, let's say you pay 1,200 rupees per month. But the moment the policy gets issued and in the proposal form diabetes is mentioned, the insurer will not cannot reject the plan because you had diabetes, because it's already part of your proposal form. Insurance is trust business. If you have the right trust, then and if you have declared everything correctly, there's no way your policy will get rejected, or there's no way your claim will get rejected. The insurer may or may not issue the policy, depending on if you have a lot of diseases, etc. The insurer may choose not to underwrite that insurance risk, and that is already as part of the guidelines. But if you hide something, and if you hide something which is a big fraud, etc., then there is always a chance that the insurer will investigate it and find it, and then may or may not reject the claim. So that's the only thing. Declare everything. The policy, yes, you are right. The policies are either issued by a health check, or it is kind of expected that on the proposal form you actually declare everything. So most insurers will do a physical medical. Some insurer may choose to do a video medical, where they on the call with a doctor they can identify. But the idea is, most of the insurer depends on trust, and hence they expect you to declare whatever you know. If you are aware, don't hide anything as part of the proposal form. Awesome. So the question is, why is the onus on the person who is taking the policy on declaring the medical? So the onus is on the person for declaring the medical, because if you are aware of a particular medical history, which may or may not get captured in part of the health checkup, you should declare it. If you are not aware of any medical history, and of course it does not come out in medical, then of course it's okay. Okay, moving on. What are the features or riders to consider in term insurance? So there are multiple riders which are part of the inbuilt term insurance. So the first of all is terminal illness. So in case you have a cancer or late stage cancer where you are not expected to survive beyond, let's say, 6 months or so, typically most insurance companies will give the money in advance. This is called accelerated payout or 100% payout on terminal illness. Why is this important? Because obviously you need some money to treat your terminal illness. If you have a cancer, even if it's last stage, you need some money to pay the hospital bills for your therapies, etc. Similarly, there is also a feature called waiver of premium on terminal illness, which means that in case you have a terminal illness, you don't have to pay the rest of the premium. So either of those two features should be as part of the plan, and they are must have. There should be an option to delay premium by 12 months. So the idea is that every few years, in case you don't have a job, etc., you are able to skip a premium for 12 months, and then you pay it after 12 months as together. This helps in case you have a job loss or you have financial constraint and you cannot pay the premium right now. And why it helps, it makes sure that your policy doesn't get lapsed and it continues to kind of remain active after 12 months as well. The other one is wellness benefit. A lot of insurance companies, as part of term insurance, offers teleconsultation, health checkups, etc. This is good to have. I think it's an amazing feature, because pretty much you are able, if you're paying 1,000 rupees a month for a term insurance, and then you get an annual health checkup and free doctor teleconsultation and some nutritionist services, etc., at free of cost. It kind of makes your term plan very, very cost effective and value for money if you're able to do it. The last one is immediate payout on claim intimation. This is very important that in case something happens to you, most insurance companies will pay 2 lakh or 5 lakh rupees when you intimate on the claim. This is important because while the claim settlement may take another 30 days or so, and the amount to the time the amount hitting your bank account or your nominee's bank account, it is very important that you need some money for immediately for managing financial, and this immediate payout on claim intimation helps manage that. In terms of paid riders, there are two paid riders which I recommend to everyone. One is critical illness riders. Why do I recommend critical illness rider? We get critical illness rider is basically saying that in case you are diagnosed with a critical illness which is non-terminal but something which can be which can hamper your income, etc. You, for example, you had a heart surgery, heart attack, or you have some severity of cancer, or you have blindness or disability, etc. Then in these cases, some of these illness will get treated, and this critical illness rider will provide you a lump sum amount of 5 lakh, 10 lakh, 20 lakh, whatever amount you have taken for managing your expenses while you are undergoing some of these treatment. It is very good rider in India because fundamentally, while the other insurances like health, etc., prices increase over time, critical illness rider, if you buy today for the next 20-30 years, you are able to pay the same price and get a 10-15 lakh cover. So it's very good. The second most important rider is waiver of premium. Typically, if you have an accidental disability or if you have some kind of a terminal illness, this helps you not pay the rest of the premium. So for example, if you have accidental disability and your job is very, very difficult, then it's okay for you to skip the rest of the premiums while your cover continues. The other good to have riders are accidental death riders. So if you are using a lot of two-wheelers and if you are think that there is a good risk that you might have an accident or something and you want to cover for that, accidental death rider is very important because in that case you get almost 1 crore of sum assured at like 200 rupees a month types, which is 1/3 of what you will pay for a term insurance. It works because in case you are a very heavy traveler, etc. So typically we would recommend it largely for self-employed customers or people having jobs which require you to travel too much. It's a good rider to add in that case. Otherwise, we will always prefer people prioritize critical illness and waiver of premium. Accidental disability rider is another rider which is a very cost effective rider and a value for money rider, where in case you have a disability where let's say both your limbs stop working, etc., or you have a permanent blindness or something, you get a reasonable sum assured of 1 crore, etc., at typically 100 rupees a month or so. So this is a rider which is very cost effective, but it is only recommended if you have extra disposable income after you have taken a critical illness or a waiver of premium rider. So these are the top 4 riders which I recommend people to buy. Beyond that, there are other riders like HospiCash, etc., which pays some money for your hospitalization, etc. Now, these are riders which are, I would say, good to have in case you have disposable income. You should buy it. Now, if you look at all the riders in term insurance, there's one thing which is very, very important. In term insurance, the price don't change. So whatever price you pay today, it is the same price you will pay for the full policy term. So if you take a 30-year plan or a 40-year plan, you will pay the same price. If the inflation is 5%, that's okay. If the inflation is 15%, that's also okay. The term insurance prices will not change. And hence, all the rider which you take along with the term insurance policy is very, very powerful, because in country like India, where the inflation is very, very high versus developed world, buying a term insurance where you can lock in premiums for next 30-40 years is like super powerful. And that is not available across the world. The last one I want to kind of ensure is that why do you want to buy term insurance now, right? So fundamentally, term insurance has 3 reasons because of which cost increases. The first is, as your age increase, your premium increases. So if you are a 28-year-old, you will pay let's say 20,000 rupees annual premium for a 3 crore cover. If you are 35-year-old, you pay 30,000, close to 30,000 rupees for the same cover. So what happens with the increase in your age, even if you take the same cover till the age of 60, you pay the same premium. Second, that insurance companies also increase prices. So every 4 or 5 years, you see a 25-30% increase in prices. So if you are 30 today and 35 5 years later, one is your base premium is going to increase by 25-30% because obviously your age has increased, but also your inflation will catch up and your premium will again, insurance companies will also increase the base price by 30%. So overall 50-60% premium increases. So that's two. And third, because you have your age is increasing, there is a likelihood for you to have other issues such as diabetes or hypertension, which can further increase the premium loading. And what will inevitably happen that if there is a 5% chance of having a premium loading at the age of 28, there is a 20% chance of having a premium loading at the age of 35, and probably almost 50% at the age of 40-45. So what happens, typically the premium will double after every 5 to 10 years. So waiting for term insurance is a guaranteed way to lose money. And that's why we recommend everyone to buy term insurance as early as possible, because the earlier you buy, the better it is from the cost perspective as well as cover perspective. So if you buy at the age of 25 and take a cover till 60, and if you buy at the age of 35 and take a cover till 60, you will end up paying the same amount of money, if not more. So there is no point in delaying. If you want to buy a term insurance, might as well buy it today. And hence it helps you locked in affordability. It makes sure that your insurability is guarded, because you can make sure that the cover which you are taking today will then exist in case your future you become diabetic, or let's say you have a heart related disease in the future, or any other disease in the future. If you have taken term insurance today and you don't have any disease, that term insurance is going to continue. And third is it creates fund, right? You're not basically immortal at the age of 25 or something. Well, of course you will not, unlikely to die because of health reasons or anything at younger ages, but there's always accidental reasons because of something may happen to each of us. So it's important to make sure that the moment you start your wealth creation journey, you should buy a term insurance. In fact, now many insurers even offer term insurance to students who are in colleges, so that they're able to lock in better prices at the start of their career. So even their parents can buy in for someone who is about to start their wealth creation journey. So somebody who's in MBA college or in undergraduation college, they can actually also buy term insurance from some of the insurers. Okay, after a longish monologue, another question for everyone. What is your biggest fear in buying term insurance? Is it A, claim rejection? Is it B, premium is going to increase later? Third, hidden clauses, and D, medical rejection. Most people are saying A, claim rejection, or C, hidden clauses, medical rejection. Awesome. So a lot of people said claim rejection or hidden clauses as the major reason. Now, let me answer the question. In term insurance, there are no exclusions. So that's the first thing you should understand. Only suicide is not covered for first year of buying a term insurance. Otherwise, there are no major exclusions in buying a term insurance. Some of the exclusions may include, as somebody was mentioning, if you are drink and drive, or if you do, and because of which your death happens, or if you kind of do some activity like which are illegal, and during doing those illegal activities, if in case you die, that's some of those are the only exclusions. In term insurance, largely, if you have declared everything and if you die because of natural causes or because of accident or because of any disease which happened after you bought the term insurance and is not covered as part of the proposal form, etc., and even if the disease is there and it's covered as part of the proposal form, all of it is covered. So term insurance is one such product where the exclusions are very limited, and it's not based on any bill, etc. So there's higher likelihood of you to get your claim done, and hence most insurers offer a 99.7, 99.8% kind of a claim settlement. And whoever claim is not getting settled, these are typically fraudulent claims where people have not disclosed. Now, quick question. In terms of what do you think are the reasons because of which term insurance claims get rejected? Is it A, because of non-disclosure of medical history? Is it B, because the policy got lapsed? Is it C, because the documentations were not fraudulent? And D, because of the exclusion clauses? D, A. A few folks have said A, few folks have saying D. So ambiguity in A. Somebody said D, exclusion clauses. Now, let me break this myth for you. Term insurance claims do not get rejected because of any exclusion clauses typically, because if the exclusion clauses are very, very limited. The reason for term insurance clauses rejection is because of A, non-disclosure of medical history, B, because you have not paid your premium and the policy got lapsed. And there are other interesting reasons, which are like you had a policy, but you did not tell your nominee you had a policy, and hence nobody came up for claim. And then there are reasons like you knew you are a smoker, but because you wanted to save some premium, you declared yourself as non-smoker. You know you had a heart surgery last year, but you did not declare it in the policy because you thought it will increase your claim or it will not get your policy. So whenever you are not declaring something, that's the only reason. Or for example, you are part of some you're part of, let's say, a particular army or a police force, or you're in an occupation which is dangerous, but you have not declared it. Because what happens if you declare some of these things, then the insurer is able to adequately price it as part of your term insurance contract. And once it is priced in the term insurance contract, there's no way you will not get claim. You are 100% likely to get the claim in such cases if you have kind of declared everything in the policy. So what do you need to do as part of buying a term insurance? First of all, you have to do we have to do the financial calculation to decide how much cover you need. If you don't remember, just take 15 to 20x of your cover, of your annual income as the cover. Second, duration. Typically take the longest financial obligation, and that will determine your cover. Third, plan comparison. Understand the claim settlement ratio, amount settled, and service. Then look at the features which are available on the product. We discussed what are the must-have features. Fourth, you have to give full medical disclosure as well as lifestyle habits, your smoking, drinking habits. Everything declare thoroughly. There's a good chance you will get a term insurance with, in case you declare everything, with some pricing here and there. But whatever price you will get the insurance at, it will guarantee your family safety. It will guarantee your financial safety for your family. It will make sure in case you are not there, your bills are paid. Adds critical riders like critical illness or waiver of premium. These are important. Last and the most important and funny thing, if you're taking it for a nominee, inform your nominee. Most people forget to inform their nominee. I have had cases where we have called up the customer saying, sir, your policy premium is due, and because you have forgotten to pay your premium, and then somebody from the family picks up the phone and say, sir, he's no more or she's no more, and then only we get to know that their nominee is not even aware that the term plan is available. We have had a lot of cases where when we are calling for customers to remind them of their premium due, we got to know that the person is no more and their nominee is not aware. So we get all the documents and help file the claim. So make sure your nominee knows about it. There are different companies do different. There's a policy copy which is available. If you buy from some of the digital channel like ours, we get claim card where you have all the details. So you can share this. You have an app on which you can share the policy with your spouse, or you add your nominee to the whole story. So it helps in terms of creating the informed decision for a nominee as well. And it's okay, yeah, your nominee should know that you have taken something for them, and it will help them make the right decision in case you are not around. How does claim assistance work? It's very, very important. And why I want to tell you this, it is important to understand if you take a policy from anywhere, right? Whether you take the policy from Policybazaar or whether you take the policy outside of Policybazaar, there is a claim service which works on Policybazaar website, on which you can submit a claim for any life insurance or term insurance product. You have to just register your details in terms of saying, hey, this is my mobile number, this is my name, and I want to register for a term insurance claim. If you have the policy details, you can give it. If you don't have the policy details, that's also fine. Somebody will, if you bought it from Policybazaar, will get it from the system. If you don't have it, based on your life assured details, somebody will figure it out from their insurer website as well, or from their insurers. Second, a dedicated claim manager will get assigned and he will take care of everything. He will handle all the paperwork, etc. What documents are required? There are some documents which are required, very, very straightforward in term insurance. For example, you need death certificate, KYC documents of yours and nominee, bank account documents. In case the person died because of medical reasons, some kind of a discharge history, etc. is required. In case he's died of accident, you need some accidental related document. And then you give it to the insurer, and then the case gets represented. Since 2018, on policy, people who have bought term plan from Policybazaar, almost 2,000 crore of claim has been settled. So that kind of gives the confidence across 497 cities, right? So whichever city you are part of, whichever state you are part of, claims do get settled, and they mostly get settled. The only reason the claim will not get settled is because you have not disclosed it fully. So make sure you disclose all your information as part of the term insurance policy by purchase, and the claim will get settled. There have been cases, if the case, there is a question which is a very interesting one. I want to answer that. What happens if both the nominee and the life assured both passes away? In case both of them passes away, and if let's say the amount sum assured will get to the next legal heir. So it's term insurance is like an asset. तो जो भी हिंदी में बोला है कोमल जी ने बात करने के लिए, तो बेसिकली अगर आपको कुछ हो जाता है और आपके साथ आपका नॉमिनी को भी कुछ हो जाता है, तो जो भी नेक्स्ट आपका लीगली इनहेरिटर होगा या जिसको वारिस जो होगा उसका संपत्ति का, उसको ही ये टर्म इंश्योरेंस का भी पैसा मिलेगा. इट्स लाइक एन एनी अदर एसेट. ठीक है. I also want to share a story, and we want all of you to remember it. We have seen cases जहाँ पे क्या होता है. So there was and this is a real example. There was a Mrs. Jory who has taken a term insurance from us in 2021 or 2022. She was based out of Bareilly. Unfortunately, she passed away. Their son had filed the claim, but the claim was rejected because there was a lapsation in the policy. So the insurer had recommended to refund all the premium paid instead of settling the claim. The son had contacted Policybazaar. We kind of understood the problem. They were not so well-to-do family, and we realized that Mrs. Jory passing away would have taken a lot of toll on their family. We actually figured out that the claim was lapsed. The policy was lapsed because of some tech issue, and not because of inability to pay the premium, because Mrs. Jory has continued to pay the premium. It was just not getting reflected at insurer end. We actually able to fight back, and we were able to settle 70 lakhs of credit, sum assured to the nominee's bank account. What it does is it kind of shows the story that in term plan, and most insurers actually end up very accommodating to the fact that, okay, it was not the policy was not lapsed, and they actually paid the claim. So what is important to understand is that if you buy from a insurer or from a digital partner for a term insurance, your claim is largely guaranteed unless you consciously hide it in terms of the details, because people will ask a lot of questions. If you are on a digital platform, most of the calls are recorded. Based on those recordings, anybody is able to figure out that, okay, you talked about this, you talked about heart disease, you talked about diabetes, etc., and there is a good likelihood that it will come in the policy proposal form also, because the digital platform will record that conversation, and hence your claim has very high chance of getting successful. Here are some examples of different customers we have seen who have gotten the claims. All of this just to give the comfort to everyone on the call that a lot of claims get settled. Right, in Maharashtra, 400 claims got settled. These are only Policybazaar claims. Right, we have put in whatever data is available for us, and if you want, you can go to our website. Our website has a lot of this claim data. You can this is the link, termclaim.policybazaar.com. You can go to this website and you can read about different claims. You will realize that people at the age of 34 has taken 50 lakh rupees in 2018. They died in 2021 due to COVID. Somebody died due to cancer, due to heart attack. Somebody died due to cancer. And these are all young customers. So when people say that term insurance is only for people after the age of 40 or something, because that's when people die, that is not true. A lot of people at younger age can also succumb to various diseases and succumb to accidents and succumb to heart attacks. Heart attack is actually very common in nowadays. Cancer is increasingly becoming more and more prominent, and hence buying a term insurance is super important for everyone. You can also go through our website in terms of different voice of customers, etc., which is available. You will find that different, whether the customer is a CXO or an AVP or an IT manager or a software engineer, everyone needs a term insurance and everyone has bought a term insurance, and that has helped them go through the journey better. So everyone in the call should buy it. Last but not the least, whether you buy it from us or whether you buy it from outside, doesn't matter. You should definitely buy a term insurance. If you buy from Policybazaar, we talked about the claim. It is the most important thing. When you're not there, when you're not there, your family is under stress. We are there. We are a listed company out there in the industry for 17 years and continue to be there as a listed company. We are there to take care of your claim. We have the lowest price guarantees. We have, in case you're not very comfortable buying online, we can send somebody to your house who can help you support in terms of driving the journey. And then you can also have online discounts, and everything is recorded. So there's obviously no mis-selling because everything is recorded. So in case something goes wrong in the future, there is always a recording available for you to figure out what was spoken on the call. There's a question on the call which says that is there a cap on sum assured for non-working spouse? The answer is yes. There's a cap on all sum assured for everyone. So it is not that today you can take a 10 crore or a 20 crore term insurance. Based on your annual income, most companies will give you only up to 25x or 20x of your income. If you're not working, typically the insurers will take your husband's income or your spouse's income if you're not working, and then based on your spouse's income, they will define the sum assured. Typically, it's 50% of your spouse's cover, or if it's limited up to 1 or 2 crores in most cases. So that's the sum assured which we offer. You can also know about a lot of other things on our different websites as well. You can browse through our website, or in case you want to kind of get some dedicated support as well, we are available in person as well, or you can I can ask the team to share the link here on the chat on which you can register for our scheduled calls as well. Somebody will kind of dedicatedly talk about more. It was a 45 minutes odd call, so we are not able to cover everything, but happy to answer any other questions on the call. Thank you. Awesome. Awesome team. Thank you so much for joining in, everyone. It was really helpful. Happy to answer any questions for people who are staying back. I will stay back for another 10-15 minutes. And somebody who wants to kind of connect directly on the website can connect with us. I can ask the Policybazaar team to share any link about term insurance, which the team can connect. One question from Akhilesh. In the recent situation like war, what is the biggest fear for a normal customer for buying term insurance apart from claim issuance? How Policybazaar is solving that problem? So to be very fair, there's no impact, at least for Indian customers within war. There is also no impact for customers basically outside India as well. Most of the countries are issuing term insurance, at least for NRIs. Uh, the only thing we have to keep in mind is that because it's difficult to get physical, medical, etc. done in terms of term insurance, you might get only limited amount of cover based on the medical guidelines, etc. available to the customers. Otherwise, there is no limit. What you should keep in mind is that things like war, things like uncertainties are becoming more and more common in the current world, and hence buying a term insurance is like super important. If you're not buying a term insurance after seeing so much uncertainty in life, then you are already a risk taker, and a big risk taker at that, because family security cannot be risked, and that's why term insurance is super important. If there's one thing you should do, is you have to buy term insurance. The best time to buy it was 5 years back. The next best time would be today. Is death recording link will likely to be shared. It will be available on YouTube as well, so there's no issue about it. Death because of adventure sports. It depends, right? Typically, sports are not likely to be get covered because you choose to put your life at risk in some of the adventure sports. Uh, Having said that, a few insurance companies do provide some kind of a cover for that, depending on the clause on the policy term. So you can always read the policy brochure as well at the time of buying term insurance for some of these cases. Okay, I've answered most of the questions. If there are any other questions which the team has, happy to answer. Will death due to war will be covered or not? See, as long as you are an innocent bystander in the war and you are kind of impacted, which means your death happens because of the war, you are covered. If you're part of the miscreants, which means that if you're participating in the war actively through protest or through kind of being part of the fighting force, etc., then we'll have to check insurer by insurer what is covered or not. But if you're an innocent bystander in war, you will be covered. So, for example, yeah, so that's the one. I'm a 44-year-old. Last year, bought a group term insurance of 3 years through 3 crore through employer for 10 years with 43 yearly premium. As it is not getting GST exemption, should I surrender and purchase a personal term plan? So, Nitin, what I would recommend is 10 years is less for sure. Whether it's a group term or a personal term, you are already 44-year-old. My first recommendation is first you should go apply for a 3 crore term insurance outside for maybe another 15-20 years at least. If you are able to get 15-20 years of term insurance or higher uh, at a reasonable price outside through medical, etc., then for you should take that. If you're not, then you should definitely continue with the group term policy which you have already gotten. That would be my recommendation. Obviously, there is GST benefit, but finally you have to compare the price with and without GST. Group term are slightly cheaper, but the problem with group term is that because it's only available for 10 or 20 years, uh, after you have kind of left the company or after 10 years are over, it's very difficult to get it renewed. Awesome. Thank you, everyone.